While some online bullion dealers continue to charge $4 over spot for U.S. Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and with us today, a new guest, the Secretary-Treasurer of the Gold Antitrust Action Committee, GATA.org, Chris Powell. Chris Powell, thank you so much for joining us today.
Oh, very glad to be here, Elijah.
All right, well, I'd first like to discuss about gold price manipulation, and you are an expert on this. Did you want to discuss a little bit about how did you originally figure out that gold and silver prices were manipulated?
Well, it was brought to my attention by GATA's co-founder, Bill Murphy, who began a internet site, LaMetricoleCafe.com, in 1998, the fall of 98, covering the financial markets, particularly the gold and silver markets. And Bill, who had a background as a futures trader, began to note that all the key price points in gold and silver, somebody would come in and smash the prices down to prevent excitement from developing. Bill always says price action makes market commentary. He attributed it to the big investment banks that trade gold and silver. I bumped into his internet site, became a subscriber, and followed his work, and I began to think that he was missing one thing. I thought he had perceived what was going on in the markets very well, but I pointed out to him that if what he was perceiving was accurate, it was contrary to the Sherman Act and the Clayton Act, which are the two major federal antitrust laws, and it was also a violation of 50 states antitrust laws on the state level, and that somebody ought to form a committee and hire a law firm on a contingency basis and sue the bastards for triple damages under antitrust law. And I told them that if somebody wanted to start such a committee, I would donate, I guess, $500 to it. And Bill thought that was a good idea, and so we started the committee. And I guess really after a year or two of research, we began to realize that gold price manipulation, particularly suppression, was a long-standing policy of Western central banks, and that the investment bank activity we were seeing was almost certainly just fronting for central banks, and we began collecting evidence of gold price manipulation, and more and more evidence turned up that the central banks were acting through the bullion banks to keep the gold price under control, in large part by creating vast supplies of imaginary paper gold, so that demand for monetary metals would be offset by this imaginary supply. That was back in, I guess, 1999 when we were founded. We've collected really a huge amount of government documents confirming gold price suppression as Western central bank policy, admissions by various central bankers. It's really overwhelming. It's just longstanding Western central bank policy to keep gold under control, to prevent it from reasserting itself as the world reserve currency again, so that central bank currencies, government currencies, can really control the world. I don't really see how there can be any doubt about it by anybody who wants to look at the documents. They're in really official government archives. The admissions are official admissions. It simply can't be talked about, though, in polite company, because if you begin to look at the documentation, you realize that the major markets are being rigged by the governments, including the commodity markets, in which governments are secretly trading according to Securities and Exchange Commission and Commodity Futures Trading Commission documents. So it's really a prohibited topic, because if you get into it, you begin to realize that our whole market system is an illusion.
When you say it's a prohibited topic, do you mean that basically news stations don't cover it? And if that's the truth, I mean, it seems like, isn't this just censorship? Why do they not cover it?
Oh, well, it's a prohibited topic in the mainstream financial news media. It just simply cannot be reported, even though really the documents have been presented by GATA to most mainstream financial news organizations around the world. I mean, a few of them will pick up on it occasionally, rarely. But North America, there's really an absolute ban. In Europe, it is mostly banned. Asia, we have a better chance of getting some attention there. But why is it a prohibited topic? Because really recognition of the topic, exploration of the topic would overthrow the world financial system. The investment banks that advertise and all the mainstream financial news organizations would withdraw their advertising, I think, from any organization that reported that the markets were being rigged by central banks, and the central banks were working through the major advertisers of the mainstream financial news organizations. So I think that's one reason why it's a prohibited topic.
Now, when you say it would basically overthrow the financial system, that's a pretty big claim. I mean, can you explain why gold manipulation? It seems like maybe to some people it might seem that's kind of just a small thing. Why is it so important?
Well, because the gold price is the reciprocal of the value of all currencies. Currencies are measured in other currencies. Gold is a currency. If gold goes up, if it goes up too much, it means that the government currencies are crashing. That means that those currencies are being devalued. It means that government bonds are worth less. Governments are really protecting the value of their currencies and their bonds when they are suppressing the gold price. They compete very much with the gold price. Gold may seem like a small market. It's actually a very large market, especially in terms of the influence it has on all the other markets. If gold ever traded freely, if paper gold was ever fully understood to be a fraud and people demanded physical gold, well, all of a sudden you'd see wholesale changes in currency values. You'd see vast changes in interest rates and government bond prices. And yes, the world financial system would be overthrown and returned to a market system.
Now, I would like to discuss a little bit more about how the gold and silver prices are manipulated, the really mechanism behind it. So you were talking about earlier about how the Western central banks, is it them who can flood the market with paper promises of gold and silver, and they don't actually have to use the physical metal? Yeah,
they give credit certificates to bullion banks and investment houses, and the investment houses hypothecate and rehypothecate on this imaginary gold. And since for years, most gold buyers have not taken delivery of their gold. They've taken only certificates. They've taken only ledger book entries for their gold. Central banks have been able to underwrite a vast inflation of this paper gold system. The great disparagement, Elijah, of gold in recent decades has been that gold price has not kept up with inflation. Well, why is that? Nobody ever asks why that is. I mean, oil goes up with inflation, food goes up with inflation, medical insurance and other things go up with inflation. So why doesn't gold keep pace with inflation? Well, the reason is central banks underwrite a vast supply of imaginary gold, as much as is necessary to keep the gold price under control. The estimates are that the ratio of real metal to certificate metal may be as much as 50 or 100 to 1. That is, there's only one real gold ounce backing, 50, 60, 70, 80, 90 claims to metal. The system works fine as long as people don't, claim delivery of the metal they bought. But if people ever start claiming delivery, the paper gold system begins to implode. So central banks have been underwriting this paper gold system largely through leasing and swapping their gold among each other, so that the very limited ounces of real metal can be applied to the really most sensitive points in the system where people are really taking metal off the market, and everybody else can accept this certificate gold that is just a piece of paper from a bullion bank backed by a claim on the central bank, which may or may not be fulfillable. This system is easily ascertained and outlined by anybody who wants to ask a few questions or read a few government reports. You can go through the annual report of the Bank for International Settlements in Basel, Switzerland, the central bank of the central banks. The BIS admits that one of its main purposes is to function as the gold broker for central banks, not just buying and selling gold for them, but also trading in gold derivatives for them. Now, why should they be doing all this gold trading? Well, the only purpose to it is regulating the gold price, keeping the gold price under control. I think 2 or 3 years ago, the director of market operations for the French central bank, Alexander Gautier, gave a speech to the London Bullion Market Association in which he remarked that the Banque de France is trading gold for its own account and the accounts of other central banks nearly on a daily basis. A friend of Gauda's got through to Gautier not long afterwards and asked him, well, could you tell us something about this trading? What's the purpose of this trading? What are you doing in the gold market? And Gautier replied to him cordially, we never give explanations for our trading. There's documents about this trading all over the place. There is a central bank policy in operation here. In the 1960s, it was the London Gold Pool, which was an open scheme of Western central bank distorting gold to try to keep the price at $35 an ounce. This is long-standing policy. They used to do it by distorting real metal that cost them too much metal, so now they do it by swapping and leasing gold and using that swapped and leased gold to create imaginary certificate gold, paper gold, and so far the markets have bought this, but there's increasing tightness in the gold market. China and Russia don't seem to be ready to settle for paper gold anymore, and I think they are preparing for a gold market system where physical is going to rule the day and paper is not going to be good enough. And when that happens, there will be some very serious changes in the gold price and in the currency markets.
Now, what about admission from public officials about gold manipulation? I know you've researched a lot about this. Hasn't there been, for example, Greenspan, Paul Volcker, haven't they talked about gold manipulation and other, prominent public figures? Oh,
sure. There's many central bankers who have given statements or written in their memoirs that the gold market is rigged by Western central banks at the behest of the United States. I mean, Greenspan's most famous comment was probably his testimony to Congress in the summer of 1998, where he said that central banks stand ready to lease gold in increasing quantities should the price rise. He admitted to Congress that the purpose of gold leasing by central banks was not what they'd been telling people, that is to make a tiny amount of money on a supposedly dead asset, that the purpose of gold leasing by central banks was to keep the price down. That's congressional testimony. It's still on the internet site of the Federal Reserve. There's admissions like this all over the place.
Now, what kind of evidence from the market action itself do you see? Do you see really strange trading action happening? What do you see in that area?
course, there's action by, what's humorously called the not-for-profit seller in the market all the time. You'll see hundreds of millions, sometimes billions of dollars worth of paper gold dumped on the market at odd times, obviously by somebody who's not interested in getting the best price for his gold. Somebody who's interested in knocking the price down. And these paper gold dumps involve nominal values that are so high that, in my opinion, they can be undertaken only by a central bank, only by a government, only by some entity which is authorized to create infinite amounts of money. These paper gold dumps happen all the time, especially at strategic price points in the market, as Bill Murphy noted 16 years ago. These gold dumps are obvious. No mere ordinary bank or investment house has access to that kind of gold or that kind of money that can create imaginary gold. These things are obvious. Somebody is always around, or always has been around, to come up with gold dumps in order to knock the price down, and does not care at all about getting a good price for his imaginary metal.
Now, you're saying that one day the manipulation will end, and then gold and silver will find their true prices, true free market prices. Now, I guess, when do you see gold and silver finally breaking free of the manipulation? And when they do, what do you think a free market price for gold and silver would be?
Well, it could happen tomorrow. It could happen 10 years from now. I think it's all going to depend on central bank policy. I mean, this date could be hastened if there was any serious financial journalism in the world, but there's not, and I don't expect there to be any. There's a fair amount of speculation right now, and I think it's very plausible speculation that if central banks determine that they have to devalue their currencies in order to avert a catastrophic debt deflation, as they've had to do before, the central banks may manipulate the gold price upward. A couple of American economists and fund managers, Lee Quaintance and Paul Brodsky, wrote a paper to this effect a few years ago. Central banks at some point may want to drive the gold price way up. I mean, that's what happened in the United States in the 1930s. And after President Roosevelt had his gold confiscation, what did he do right after that? When the government had grabbed the gold, the government devalued the dollar and upvalued the gold by a huge amount. So, you may have an upward manipulation at some point, but that's not happening now. And when will this upward revaluation happen? If the central banks don't do it themselves, it may be accomplished simply by the exhaustion of the central bank gold reserves that are being used to support the paper gold system. There are indications that there's really tightness in the physical gold market right now. The London gold pool collapsed in March 1968 because they were running out of gold. They may be running out of gold now. China may take too much. Russia may take too much. The general markets may take too much, and the central banks may no longer be willing to swap or lease gold to underwrite the paper system. So certainly ordinary market offtake, even by retail investors, could prompt a revaluation of gold. But I don't know. The central banks don't share with GATA their true inventory position with gold. I've said for many years that the true location and disposition of central bank gold reserves are secrets far more sensitive than the location and disposition of nuclear weapons.
Now, what about precious metal miners? It seems like if the gold and silver prices are being manipulated downwards and being suppressed, it seems like that doesn't seem like a good thing for precious metal miners. Can you talk a little bit about how precious metal miners have been affected?
Oh, of course, they've been, bankrupted. Their whole industry has been smashed to bits, and not just the industry, really the economies of the developing world. The commodity-producing countries have been, smashed by this. But that's the objective. The objective is to really give the developed world with the established currencies more power to exploit the developing world to get the raw materials cheaply. This has always been part of the policy. Fortunately, for the exploiting nations, the mining industry couldn't care less. In fact, the mining industry, I think, acts as if it's owned by the Western central banks. Now, you have to really be a little bit sympathetic to the mining industry for a couple of reasons. I mean, first, the mining industry is probably the most capital-intensive industry in the world. A typical mine requires billions of dollars in investment to open, and the mining industry thereby becomes dependent on the major investment banks around the world to finance them, and the major investment banks are the tools of the central banks in most respects. So, the mining companies don't want to alienate their bankers, so they'll, have their funding cut off. Secondly, the mining industry is probably the industry most vulnerable to government regulation. Miners need government approval for their, mining permits, and of course, governments set environmental regulations and enforcement, and the royalty requirements. So, miners are not only at the mercy of the investment banks, they're at the mercy of governments as well. So, if you ask a gold or silver mining company to complain about gold price suppression by governments really being managed by investment banks, you're asking them to alienate institutions that have great power over the mining business. On the other hand, I wish the mining industry had realized by now it can die on its feet or it can die on its knees, but it ought to fight back. It might do well to fight back through an industry-wide organization like the World Gold Council, but the World Gold Council, I think, exists only to make sure that the world never has a World Gold Council.
Now, as for individual investors, it seems like if people are willing to sit tight while gold manipulation is still ongoing, but if they can wait until it ends, it seems like there's this really good opportunity. Some people say, well, why invest in gold if it's manipulated down? But it's like, wait a second. It seems like you can ask it a different way. Isn't it a great price right now because it is being manipulated down? And once the manipulation stops, it could go up a lot higher. So basically, you're getting a bargain right now. What is your perspective on that?
Well, it's possible, Elijah. There's certainly a vast naked short position in the monetary metals, and that naked short position certainly presents at least a theoretical possibility of a price explosion if it's ever discovered that the metal isn't there, that huge amounts of imaginary metal have been sold and that cannot be delivered. On the other hand, there are risks in fighting that short position, because that short position is essentially a government position. If metals prices exploded upward, who's to say that governments would let investors keep their gold and silver? There's always the possibility of confiscation. Certainly, countries would immediately impose new royalty requirements on mining companies. They wouldn't let the mines walk off with the windfall profits. And the other thing is just the simple time angle, Elijah. The gold price suppression scheme has been going on for many years. I cannot tell you when it will end. I think every day brings us closer to the end, but is it a year from now? Is it 5, 10, 15, 20 years? I've known many people who perceived the rigging of the gold market and the vast naked short position and the great vulnerability of the market to a price explosion, and they died before they realized the profits they should have seen by virtue of their perceiving what was going on. The problem is that everything is a matter of time. With infinite time, there's infinite possibilities. I'm 66 years old. Am I going to live to see the monetary metals market liberated? I don't know. I'm not sure. I think maybe people in their 20s and 30s will live to see it. But I don't know that this is great investment advice for people. Maybe over the very long term, it's a much better possibility than it is over the short term. But GATA is not an investment advisor. GATA is a civil rights and educational organization that advocates free and transparent markets and limited and accountable government. That is, that advocacy is not necessarily the path to great wealth. Totalitarianism is usually the surer path to wealth, and we're against that.
Well, Chris Powell, I really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Oh, sure. Our internet site is gata.org. We do daily dispatches of news stories and analysis and documents that bear on gold market rigging. When they go out through our little newsletter, people can sign up for that at our internet site. Our dispatches are free. I also urge people to consider subscribing to our chairman's proprietary internet site. Bill Murphy runs LaMetropoleCafe.com. It's a subscription site. He does that separately from GATA, but I think, does a great job of covering the gold and silver markets. And our other board member, Ed Steer, does the same thing. I think his internet site is edsteergoldandsilver.com. He's got a daily letter as well that people can subscribe to that. I wouldn't miss either of them, but GATA's own work is free at gata.org.
Once again, thank you so much for your time today.
Thank you, Elijah.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Bix Sweer, where Bix Sweer discusses, should preppers really wish for the end of the world?